All right, good morning, everyone. We're going to get going here. All right, U.S. markets traded slightly up yesterday on very little news. Obviously, a lot of Europe was closed due to banking holiday. I think just continuing to kind of grind higher. Markets feel very either under-owned or somewhat short at the moment. Seems like pullbacks are really hard to sustain any momentum. So I think it's important to keep an eye on that. I mean, there was no real leadership or anything like that yesterday, but just the market still ended up putting in a green day with no real reason. So and we continue to stay in the same theme that we've been on for months and months now, and that markets just outperform regardless. In Asia, you can see there we've had the Japanese index that's been closed for a couple days. Really exploded last night. We were up over 3% on the back of obviously U.S. markets breaking the new highs, as well as some of the other markets breaking new highs. We also had Australia's interest rate cut that happened last night. It was kind of mostly expected. I think 2/3 of analysts or economists were expecting them to cut rates. They did, and so you're seeing the Aussie dollar also break through that 102 handle. But around we'll show that in a little bit on the maps. But there's some support right around where we're trading at the moment on the Aussie dollar. All right, very little in terms of corporate action out on the day. We had Societe Generale earlier. They beat on the net income number. Then we have Lafarge that's also missed this morning. So I think U.S. markets or U.S. earnings season is pretty much winding down to a close. Now I think we've got a little bit of European earnings to look forward to, and then also some local stuff coming up on the horizon. All right, market data today, very little. Obviously, we talked about Australia cut rates. We've got industrial production and manufacturing production out of France, and then we've got German factory orders. So really light on the data front on the day today, and I think this week in general is going to be a little bit light. Okay, let's jump into the maps real quick. All right, first thing I want to have a look at is actually the FTSE. Let's see. Okay, there we go. FTSE, the reason I wanted to show it is just another one of the markets. I mean, we can go through all the indexes really quickly if we want to here, and you can see how this thing's just actually not sticking again. Sorry guys, just let me create a new chart real quick here so that I can get this to actually stick. Okay, sorry about that. All right, so let's have a look here. You can see there the FTSE very, very close. I mean, we were within 12 points, I think, of breaking to an all-time high here on the FTSE. We talked about this kind of trend line resistance that we had bringing up to this flag pattern a couple weeks ago, which has sustained itself, looking to break up, following in the footsteps of possibly the German market, which you can see here. The pattern looks very, very similar, except for the German market's already broken up. And it's already traded through to new all-time highs. I think the FTSE is very close to following in those footsteps. Obviously, we track the FTSE probably more than anything because it's a more commodity-heavy index. So something to watch out for today on the FTSE. I also want to show the Aussie dollar here. You can see here how range-bound we've been in the Aussie dollar now for basically the entire last year, and we're really right down here, just below 102. I would say support is probably around 101.90, which is almost exactly where we're trading at the moment. If we break below 101.90, you can see there we'll probably really see significantly lower levels. out of the Aussie dollar. And the reason why I think this is important to watch is because I think the reason why the Aussie dollar struggling at the moment and the Aussie economy struggling at the moment is because due to commodities, and how tightly linked they are to China. And China obviously is, I think, slowing down a little bit faster than the rest of the world realizes, hence the fact that commodities have really been hit quite hard, and the fact that the Aussie economy is slowing down faster than a lot of other economies, and they're one of these central banks that are still looking to cut rates. So it's important to keep an eye on, important to see what that currency is doing. I think if that currency continues to show weakness, that we could see further downside in some of these commodities as well. All right, Standard Bank. I just want to show here we've kind of got a upward sloping wedge here that we've made out of off of this pullback. Not a very bullish pattern. You can see here as of yesterday we turned below it. Basically anywhere 112 or below is below this wedge pattern. I really think that it's very possible that we could come back down here and retest the lows. I'm not bearish on the stock for any other reason, but technically it's just not looking entirely happy. Obviously, I think the banks have taken a bit of a smack on the back of Able and what's happened there. So just keep an eye on those. We'll also show right here we've got Nedbank. You can also see kind of a little bit of a sideways consolidation. I mean, this is a bit of a wedge as well, I suppose, but not as classic of a pattern. We've broken below this little consolidation range here, which is really about a $5 or $6 pattern, and breaking below, I think 83. I wouldn't be surprised for us to see as low as 178. So keep your eye out for that one. We could, and that lines up really nicely to where we kind of broke up from the bottom of this pattern here. So just keep an eye on Nedbank over the next couple sessions. It could have a little bit more downside. All right, Foschini I wanted to show on a 30-day. Just the reason I wanted to show this is you can see how significant the 109 level is. Going all the way back almost a full month, it's really the line in the sand has really been 109. We did have a couple days where we touched 108, but I think that we closed around 109 on those days. It does look that we could be forming a little bit of a bear flag here. So I'd be cautious on this. I mean, the last couple of days, we've just kind of really pushed up against this 109 a lot. I think it spent a lot of time there yesterday. So keep an eye on this. I think if we break below 109 here, the guys that are owning this thing, there's probably no reason to own it anymore. If we close below 109, and if we hold in, maybe we can push a little bit higher. All right. Next one I want to show is Mutual. And same sort of pattern. We showed a lot of this pattern yesterday, breaking out here above recent highs and really all-time highs on Mutual. And you can see there the breakout here is at 29.20. We came all the way from below 27. So I really think it's close to 2.5 Rand upside above 29.20. So I wouldn't be surprised for us to see around 30, close to 32, maybe around 31.50. And all Mutual over the near term, and these patterns have been the best patterns to play over the past year and a bit. So this same as like your breweries from yesterday. A lot of the other stocks also making this similar pattern. All right, and that's last one for local. Last thing we'll show here is Barclays on the LSE, which is really it's putting in kind of a long-term bull flag here. You can see there. We really, as of yesterday, we really broke through. We broke above that flag pattern. I think this thing can easily trade to recent highs, which is significantly higher than this, about a good 10% higher, up to around $3.30. So keep an eye on Barclays. That's it for today, guys. Thanks a lot.